Hi, I'm Amy from Spurling. I really hope you enjoyed this webinar, which is aimed at giving you a really brief overview of what was announced in yesterday's budget. It was really interesting to see that the focus was on corporate tax rather than looking at bringing in changes aligned with personal tax, such as dividend changes or capital gains tax rate changes. It was interesting to see that certain things were frozen, such as the inheritance tax exemption limit of 325,000. So it's really important to be looking at planning in these areas. If you have any questions following this webinar, please direct those to me via a phone call or an email, or alternatively reach out to one of my colleagues. We hope you enjoy. Thanks.
Hello, I'm Philip Crowther-Green. I'm here with our tax partner, Amy. Rishi Sunak delivered his second budget yesterday on the 3rd of March 2021. It's fair to say that this was probably one of the most anticipated budgets in recent history, coming as it does towards what we all hope is the end of the coronavirus pandemic, and of course the impact that's had on the economy. Before the budget, tax rises were predicted, and we did get some, but there's also a lot more to talk about. We're tax professionals, so our approach to this budget roundup will be to talk specifically about tax, but also follow the format that the Chancellor used in his speech. So, what did he say? Well, there were three prongs to what he said. First bit is about protecting jobs and livelihoods. Second bit was about strengthening the public finances. This is where we expected to see, and indeed did see, some tax rises. And the third section was about recovering the economy through investment. We'll look at each of these three sections and highlight some of the key policy changes and what it might mean for you. So the first section of Rishi's speech was about protecting jobs and livelihood, and this is about where we are now in light of the coronavirus pandemic and the continued financial support that the economy, businesses and people will require in the coming financial year.
The special measures that were introduced primarily surrounded furlough and business support. Up until the end of June, furlough has been extended on the same basis it is currently in place. From July and August, things will change. In July, the employers are expected to make contributions of up to 10%, and following that, in August and September, this will rise to 20%. The self-employed have two further grants. For those that weren't entitled previously to support because they've just started self-employment or they hadn't submitted anything to HMRC, will now be entitled to help. This is on the basis of 80% of the average of 3 months of trading profits, capped at 2,500 paid over 3-month periods. This is in line with the current furlough amount, as we know. From May and September, the focus will change from the averaging basis, and this support will instead be calculated on turnover and looking at how this is decreased. And it's yet to be seen how this will work in any guidance, so we're hoping that the government will announce something soon in relation to calculating this. Business holiday rates have been extended for qualifying businesses to 30th of June for full relief at 100%. This will then be reduced from 2/3 from July to the end of the tax year on the 5th of April 2022. There was somewhat welcome news for those who are selling or buying. The stamp duty land tax exemption will be extended on the same basis that's currently in place until the 30th of June. This means that there's no stamp duty payable for transactions up to £500,000. From the 1st of July to the 30th of September, the nil rate band will be reduced from 500 to 250. From the 1st of October, the nil rate band will reduce back down to its original pre-COVID rate of 125,000. There are hopes that this will ease pressures on conveyancing practices and also solicitors, and just generally stagger the housing market. From a VAT point of view, the current registration threshold is frozen, and to assist the hospitality industry, they have reduced this rate, extended this to the 30th of September. There's also going to be a 12.5% rate for hospitality from the 1st of October to the 31st of March.
And finally, in this section, I'm not entirely sure why it came into this particular section of the budget, but that's where the documentation puts it. Some relief for drinkers and drivers, although hopefully not drinking and driving at the same time. Alcohol duty has been frozen. There would probably been a revolution if they hadn't done that, given people wanting to celebrate the end of lockdown in the next few months. And fuel duty has also been frozen. Of course, both of these duties are already quite large, and fuel and alcohol is already heavily taxed through a combination of the duties and VAT. Strengthening the public finances. This was the second part of Rishi's speech, and for those of us with an interest in tax, it was probably the most interesting. The government has spent over £400 billion in support measures to combat the economic crisis caused by the coronavirus pandemic. So the question is, who's going to pay for this? And there were clear signals towards tax rises within Rishi's speech.
This was the most interesting part of the budget for me. There's been a lot of press speculation in terms of this being somewhat of a stealth wealth tax, with allowances being frozen on inheritance tax and capital gains tax. Looking first at income tax, the current threshold is £12,500 before you pay any income tax. This is going up to £12,570 from the 6th of April this year. This will, however, be frozen until the 6th of April 2025. And the Chancellor did say, everybody's take-home pay will remain the same, but obviously other costs are going to continue going up, probably, such as council tax and other costs that we all bear. So it is going to hit all of us. The inheritance tax threshold before anybody pays inheritance tax in life or in death is currently £325,000, and this is going to remain at that current level. The interesting part about this is the inheritance tax threshold has remained at this rate for many years, and a significant amount of people would already exceed that in their lifetime estate and certainly in their death estate. So it's really important, again, as I said in the introduction, to be thinking about ways of mitigating your inheritance tax estate, even if it's just looking at ensuring that it doesn't grow any further by doing potentially some gifting or some relevant planning. The residence nil rate band is also currently £175,000, and that will be remaining at that level too. The savings allowances are also staying the same, and the ISA limit is also frozen. So this will have an impact for those who have a significant amount of income, and also savings that will be moving into the income tax rates. Just looking at that final point on the capital gains tax, it was well documented that there were going to be changes, but there weren't any changes yet. But I wouldn't be surprised if something was announced potentially in autumn time. Looking at corporate tax, the current rate is 19% for all corporate entities. This was obviously a lot more favourable compared with income tax, and we have previously looked at using corporate structures to hold family investments and to look at longer term planning, because the growth is obviously taxed at lower rates compared to income tax, with the worst rates being sort of 45%. This was quite an interesting change because it does fall back in line with what was previously in place a few years ago with the small, medium and large company rates. Whether or not this will follow that previous rule is yet to be seen, because the guidance following the paper copies of the written guidance issued by the government following the announcements, there isn't a huge amount of detail on this, so we will be issuing something on our website soon to illustrate what this means. Effectively, the main rate will be for what's estimated to be up to the top 10% of companies in the UK will be 25% of tax on profits. For the smaller companies, those who have 50k of profits or less, the existing rate will be maintained at 19%. Now, what I just mentioned relates to companies who have profits between 50,000 and 250,000, and there will be a tapered rate. I think it's really interesting to look at maximising expenditure. I'll move on to a following slide, which introduces a very generous capital allowances rate from April 2023, but these rates will be in place before that. So it will be interesting to see for those companies who have expenditure that they need to incur, whether or not it'd be better to bring this forward to ensure that you don't fall into that tapered rate or potentially the higher rate, versus using that capital allowances new rate from April 2023. So it might be worth looking at a bit of forecasting just to see how the corporation tax comes out.
Final parts of Rishi's piece considered an investment for the recovery of the economy from the damage caused by the pandemic. This also does tie into the levelling up agenda which dominated the Conservative Party election campaign, but was inevitably sidelined by the coronavirus pandemic. So we'll look at some of the measures that have been introduced here. In particular, we'll look at some of the support for businesses. So the couple of tax breaks there that were announced. First one there is a temporary relaxation of the loss carryback rules for corporation tax, allowing companies to carry back losses for 3 years rather than just 1. This is temporary, it will only last for 2 years.
Looking at the future for capital allowances for the super deduction, as it was so labelled, this was slightly complicated to follow, at least for me. I don't know about anybody else. It introduced 130% of the first year allowance as a deduction against corporate tax. This will mean that companies cut their bill by 25% for every £1 they invest, and the 130% relates to a complicated calculation to do with the sort of overall tax effect on losses. This is intended to be allocated to the main pool of assets rather than special rate pools. Again, this will only be available for the next 2 years before the new tax rate applies. This is understood not to affect the long life asset pool, which still has a special rates of 50% of capital allowances. So I think it's really important for businesses here with the loss relief provisions affecting early years and this new capital allowances to actually look at what the business needs to be doing and what it has done and do a bit of forecasting over a few years and also looking back, because for me it's all about maximizing cash flow and looking at trying to keep the tax rate as low as possible. So if this affects you, please get in touch with either myself or Mark Harvey or Sue Keane, whoever your contact is. Looking at this final part of the prong 3, the recovery strategy, the help to grow was trying to stimulate a huge amount of economy in the UK and also growth in the green areas. Looking at the 2 parts here, he announced that there would be support for management training and overall sort of management and upscaling those individuals in medium-sized enterprises. This is intended to be an MBA style management training which would last around 12 weeks. The second part of this was to encourage medium-sized enterprises to enhance their digital production using software to enhance productivity. They are providing free advice for up to 5,000 to acquire software and just to provide support in this area.
And finally, freeports. This was something that Rishi finished his speech with, and I think he was quite keen that it was one of the major headlines to take away. So he announced 8 freeports across England, including 2 in our region. So that's Thames and the Solent. It'd be interesting to see what effect these have. But as you can see from the screen there are a number of tax breaks which are announced, which it's hoped will apply to these freeports. So that's an enhanced 10% rate of structures and business allowances, 100% capital allowances. So that's of course in addition to the allowances we've already discussed. There's full stamp duty land tax relief for the purchase of commercial property, full business rates relief, and the final one there is national insurance contributions relief. That one is subject to approval and due process, but nevertheless there are clearly some very beneficial reliefs there.
I hope that you've enjoyed this webinar. Please do let me know if you have any questions or you wanted to get in touch with me just to see how this affects you personally. We're always happy to do some forecasting or just have a discussion around your circumstances. Again, my name is Amy Robbins and my team are also available to answer any questions. Roger Heath, Peter Susham and Philip Crowther-Green. Thank you for listening. Bye.